Okay, we're going to get started now. Thanks for joining on the cash flow webinar. Appreciate that. I am going to go through the whole presentation. I'm going to start with an intro, some basics on cash flow, then share the template, and then we're going to go through two real life exercises with two individuals that volunteered. And I appreciate both Heather and Francine for helping out with this. I think it's going to be a big help for everybody. I'm going to start to share my screen now. And here we go. First of all, in situations like this, and situations really anytime, cash is king. And right now more than ever, you need to treat every dollar as if it's your last. Every dollar as if it's your last, because there's so much uncertainty with what's going on. We need to make sure that we're hanging on to every dollar for as long as we can. Now, the new normal is we have to downsize to a cash break even based on the sales expectations during the crisis. So whatever average sales you were receiving on a weekly basis, you got to throw that out. This is different. And so what we need to do is understand and do our most conservative estimate of what that future revenue is going to be, so that we can kind of work backwards into making the company at least cash break even. And then finally, we will get through this. That's what the whole point of doing what we're going to be doing is, to give you the tools that are going to allow you to be prepared and to stretch it out as long as you need to in order to get through this. Because once you get through this, there's a lot of opportunity on the other side. Why are we doing this? Because remember, no money, no mission. We're going to have to make some hard decisions here. You're going to have to make some cuts. You're going to have to probably lay people off or furlough people. But if you don't have any money, then you don't have any business, and then nobody comes back. So the whole point here is no money, no mission. We want to make sure that we're preserving the cash so that we survive through this, so that we can live another day and then bring everybody back. We want to bring our staff back. That's the whole point to this. And then remember, after this crisis, there's lots of opportunity on the other side. A lot of your competitors are not going to be as prepared as you. Businesses will fail, and there's going to be a lot of opportunity because of that. And also, there's going to be many more high quality, experienced employees available. That's the reality of the situation on the other side. So if you can make sure that you're managing your cash flow and you're surviving through this, there's going to be so much more opportunity, not only in taking perhaps your competitors' market share, but also in having more available, experienced employees, something that we haven't seen in a while. And your competitors are not as prepared as you. So don't forget that. Your competitors are probably not doing as much as what you're doing today. The fact that you're here today is part of the reason why you're going to be one step ahead. Now, cash management during the Corona crisis, what I'm telling my clients is to expect this to last at least 3 months, and then slow growth for the next 12. So this is going to take a while, and we want to make sure that we're being as conservative as possible about what our expectations are with cash. Assume accounts receivables will be collected very slowly from essential industry clients. I'm seeing a dichotomy here with my clients, the ones who are considered essential businesses and the other ones that are non-essential. If you're an essential business, then there's at least going to be more money flow. In fact, there's some businesses that it's almost like business as usual. And then you have the non-essential, where business is basically stopped. Now, if your accounts receivable are from customers that are part of an essential industry, then at least you can assume that the cash is going to continue to flow for them, which means you will get paid. But it will still be a lot slower than it used to be. You have to assume that. And then when it comes to accounts receivables for non-essential industry clients, you have to assume you're not going to receive that for now. So we're not going to include those in any of our future week estimates. And be flexible about adding, changing the business model. You know, whatever worked before the crisis may not be working today, especially if you're a non-essential business. You might need to pivot. So you want to start thinking about, how can I reuse my space, or how can I do different things to allow at least for some revenue to come in during the slow times. And expect to lay off and furlough employees. Again, no money, no mission. I know it's hard. I know their family. It feels like their family, and you know them, you know their kids, you know all of that. And I know it's hard. But if you don't make those decisions, the greater risk is the whole company goes down, and then everybody loses their job. Do not go deeper into debt in order to keep employees longer than needed. Do not go deeper into debt if you don't have a strategy behind it. One of the suggestions that I'm hearing a lot is for you to max out your line of credit. And part of the reason is the fear that the bank is going to give you a call one day and say, hey, you still have $50,000 on your line of credit. I'm sorry, we're pulling that 50, so you can't pull any more of that line of credit. So a lot of businesses are just grabbing the whole line of credit for fear that that's going to happen. I'm not arguing that that's a bad strategy, but I am arguing it is if you don't have a strategy of how you're managing your cash flow. If you already haven't made all the cuts that you feel you need to make, because what we don't want is for you to throw good money after bad and then be further in debt. Review and cut all non-essential expenses. I'm going to have another class on this one, but what you want to do is you got to review all of your expenses, all of the expense line items on your profit and loss. Review all of your expenses and start cutting anything that you don't need. And be very, very, very slow to pay all expenses, all essential expenses, especially, but definitely the non-essential expenses. You're going to have to slow it down. That's the advice that every business is getting. So that's going to happen with everyone. And if you can afford to, offer to pay deferment for your clients. So in other words, if you have a runway and you want to build some significant trust with your clients that are going to last for perhaps forever, help your clients today. Give them the service, give them the product, and tell them you don't have to pay for a while. It's okay if you don't pay this for a year. I'm okay with that. Some companies are in the position to be able to do that. That doesn't ever get forgotten from a client. So now we're going to move over to the actual template itself. And the template looks like this. Now, the way I broke it out, and this is something that I have been using for decades with my clients. When I worked as a controller, as a CFO, you got to get your finger on the pulse of cash flow. That's the first thing. So whenever I would come into a company, many times I would be hired in a situation where the company was failing. And the first thing I needed to do was to know, do I even have enough cash flow to pay payroll next week? So what I would first do is create that template, get my finger on the pulse, make sure that I can pay next week, in the week after, perhaps. And then I could start focusing on the bigger picture strategy, things like that. So the spreadsheet is a very simple spreadsheet. And once it's set up, it is literally 5 to 10 minutes a week. 5 to 10 minutes a week for you to know exactly where you stand and exactly where you will be headed. As you can see, the way the spreadsheet works is that it's weekly, and it's going to have every one of your cash accounts plus your line of credit account separated. Now, at the bottom, they sum up into one cash balance. And that is the balance that we're going to be using for our cash flow chart, which I will get back to you shortly on. Now, as you can see, as part of the way that I set it up is that I get some history. Typically, I go a full year, but in this case, we're only going to do 3 months because that's really all we need. And I enter all of the information for each week. And basically, all I'm doing is taking your weekly cash detail for each one of your bank accounts and making sure that I double check the beginning balance and then add the cash in and cash out. And as you can see, I don't have many rows here. I haven't broken it out that deeply because I don't have to. You don't have to. All you want to do is separate it enough so that when we start forecasting the future, the averages of what we're going to be forecasting are reasonable. In other words, when it comes to cash out, we want to separate our American Express payments because that's once a month versus putting it in the cash out payment because that will skew averages. So we would separate the American Express and we would separate payroll. And in this scenario, we're separating debt payments as well because they're not weekly, they're once a month or twice a month or something like that. And as you can see then, from week after week, we have all of the information up to the current. Now, what we do next is that once that information is in, we need to address today's situation. So what I do is I'll sit down with a client or talk to a client, and we're going to show you 2 examples of that today. But to kind of run it through, let's assume in this scenario that it isn't business as usual. There will be some business, but not nearly the average that they were seeing in the 40,000s. So, and what they believe is it's going to be about $7,500 a week, and the expenses associated with that they believe are going to be about $55.20. So now we have revenue and expense that's going to be our realistic, conservative approach to what we're going to see during this corona crisis. Now, again, one of the other things that I want to do is I want to assume what I hope is a worst case scenario or a bad case scenario where we go 3 months. All right. Now we go back and let's take a look at some of our other expenses. We have payments for American Express. Now, last month we had pretty much our last month American Express payment was on the 14th. We have another one in the middle of the month. Half of the month was almost business as usual, and the other half is not going to be. So in this scenario, we're going to assume that it's going to be about half of the standard payment. And then when we get into the future months, we're going to say it's negative 3,500. And then we'll throw the negative 3,500 payment for the next couple of pay periods because everything is going to be slower during that 3-month period. All right. So now we have all of that set up. I still have my debt, which we'll talk about in a second, and we have our payroll. Now, as you can see here, we have a cash flow chart. I want to move over to that for a second. Okay. So I'm an accountant. I'm a CPA, and numbers are very comfortable for me. Now, when I first started doing this type of scenario analysis, I would show everybody the numbers and say, well, can't you clearly see what's going on here? And of course, most people aren't numbers people. So eventually I brought up the chart. And this saved so much communication for me because I no longer had to try to explain it with the numbers. All you got to do is have this chart. And this basically says it all. It says that under those conditions, we are going to have to tap into our line of credit in about early May. So we need to make adjustments today to fix that. We need to basically flatten the curve, similar to what you're hearing with the coronavirus. So how do we do that? One of the things that we need to do is take a look at our payroll. So there's a worksheet for payroll where you would plug in all your employees and then plug in either their hourly rate or their salary rate. And once you've done that, then all we need to do is start doing some scenario analysis. In this scenario, because we're dropping our work at least 75%, there's several technicians that we are going to lay off. So when we do an X, as you can see, there's the pay disappears. An X here for this technician. We won't need our admin during this time, and one more technician. As you can see, that drops our salary, our total biweekly pay, $8,600, our weekly pay, $4,300. So however you pay, you can link it to whichever line item, whichever row. Now, when we go back to our cash flow forecast, our payroll dropped to $86.93. When we take a look at our chart, okay, now we're starting to make a difference here. We're not done yet, though. I know from just some examples I've already heard that banks are essentially just allowing deferment of payments for 3 months, no interest, no fees. So let's make that assumption that we're also going to defer our bank payments for the next 3 months. Let's take a look at our chart. Okay, there you go. Now, just by having something like this, it can make a significant difference in your survival. Something as small as that. The reason why the chart is so important as well is that not only is it easier to just take a glance every time you make an adjustment, but also in situations like this, I find that this is the best time to be sharing it with your team. Everybody's scared. Everybody knows we're going through a crisis. We need to work together. And believe me, if you don't share this stuff with your employees, especially at least your top level executives, they're going to fill in the gap and they're just going to assume that they're going to be let go or something. This makes it more clear they could be part of the solution, and it creates more of a team environment. You don't have to be alone in all of this. Okay, so now we're going to jump into some real life situations where we're going to show some real life numbers. I'm going to start with Francine. Francine, thank you again for volunteering to do this. I really do appreciate that.
Okay, my pleasure.
So Francine, first, if you could just explain to everybody what industry, the type of business industry that you're in.
Well, we design and we build exhibits for companies that attend trade shows, conferences, face-to-face marketing events. And these events have started being canceled back in mid-February. We had some large displays being shipped to Las Vegas and Orlando, and the trade shows were canceled. So as of now, all of that whole industry is totally shut down. So no one's interested in even talking to me right at this moment to talk about trade shows, although we're trying to be very proactive in our marketing. And but so I have to assume that I'm going to be down for 3 months.
Okay. All right. So let's let's talk about that. It is certainly not business as usual for you. And I plugged in all of your information, and as you can see, you were averaging approximately $14,000 a week.
Yep.
Of course, that's not going to happen
Nope.
based on what you just said. Let's start there then, Francine. Let's go through this. What do you estimate conservatively what you will receive on a weekly basis from this point?
Nothing.
Zero.
No. I have payables. I have a fair amount, but I'm not expecting my clients to send any money right now.
Okay. And we're going to extend this out through the end of June.
Okay.
So hopefully we won't have to go that far, but I think that's the safest way to do this. Now, cash out, obviously, if you don't have any activity, then there's not as much payment going out. On average, you were paying out $8,500. What do you assume that's going to be now? Is it going to be zero as well?
Well, cash out is we're still operating, so it's going to be our operating expenses, which is the rent and internet and phone and car and insurance. So I still have to keep this going.
Yes.
So, yes.
So how much are you thinking?
I had that piece of paper. I think I can't remember where I put it. I think I said about, and I can't remember what I said. Sorry about that.
That's okay. So
it before? I gave it to you before. Do you still have it someplace?
You know what? I started over with another copy. So for this, we'll just leave it at that. Why don't you just, we'll go through it again. You said the rent?
The rent and utilities.
Yes.
I'm just calculating it quickly right now.
Yeah, take your time.
Okay. Can I add what happened when you and I had this conversation a week ago on Thursday?
You sure can. Sure.
I spoke with Tony about that last Thursday, and I still had all my staff here. And he says, well, you're going to have to lay your staff off. And I started to cry because my staff is like my family, and we're a very close-knit, we're a very united team. But after we discussed a little further, and I decided to lay off everyone on Friday. So that when Tony and I talked again on Monday, after I told him that I had laid off almost everyone, I kept my right-hand person who hopefully eventually is going to take over my business. And we decided to cut our salaries by 20% and let everybody else go. So it's that's what's going on right now. So that I'm calculating here.
Yeah, take your time.
I would say about my expenses, my monthly expenses, if I pay the rent, is close to about $4,000. If I don't pay the rent, then it's going to be closer to maybe 1,200, 1,300.
Okay, so then let's, did you talk to your landlord yet about the rent?
Yes, I've already written him a letter, and he responded very kindly that we were going to be able to work things out.
You can. So without that, it's about $1,300 a month.
13, wait a second. No, maybe about 2,000 a month.
Okay.
I need to pay, insurance is just due now, so I need to pay insurance.
Okay, so then what I'm going to do here is I'm just going to now average that in. It's about $500 per week.
Right.
So for now, we're just going to plug that in. And then sales tax will drop, I'm
Well,
sure.
uh, I paid February sales tax already, so it will be March, and March isn't that big because this started a while ago. So I think sales tax for March is going to be about maybe 2,000, I think.
Okay, and then the remaining months we should go with even less, I would assume.
Yes.
Zero.
Well, no, we have to do some invoicing at the beginning of the month. It's not going to be much. Pay, say, I don't know, $600.
Okay. So as everybody can see, we're manually plugging in uh, the months ahead because these are different months completely, and they're certainly not business as usual. Now on the payroll, again, we're not going to share the payroll spreadsheet here with everybody on the webinar because obviously we have names and things like that. And as Francine, you were saying, and I know from just watching you on social media and your team, it's you guys really are a lot like a family. And when we had that first conversation, Francine did have to cut the conversation short because of just the emotional part of it. But I am glad that you made the right decision because you do have a really strong team, and that is going to be the way to keep the business viable so that you can bring them back. So I applaud you for doing that because it's not easy.
Thank you.
The payroll you had said has dropped down to how much would it be about?
About 2,200.
2,200. Okay. So we would take the 2,200 and we would do that. Okay. Now we have all of Francine's accounts. And just one other thing I want everybody to notice as well. Transfers between accounts is not new money. So it would just be out one, in another. And there's a special check down here. As long as that's a zero and it's not a negative number or a positive number, then that tells you that you've done it right. Okay, so now with all of those changes, and we take a look at the chart, now what we see is Francine had been in a reasonable position cash-wise, and with all of those cuts, she's showing that she can survive pretty much throughout the rest of the year as it trickles down, but much more slowly. When we first did this, it showed a significant drop off. So this is the reason why. Let me put the payroll back. If Francine kept everybody, that's what it was looking like. So that she would have run out of money somewhere in July, and then of course risked the company depending on how long after you would have anything coming back, because it certainly for your industry, probably Francine, I would assume is going to be slower than other industries as well, but hopefully not.
We have our own industry conference, which I was supposed to leave tomorrow to go to in Las Vegas. Obviously, it's been canceled. And we've been receiving some information that it's been rescheduled for August. So I think people are chomping at the bits to get back into the industry, into doing trade shows. And I think obviously so many people want to increase their sales, and this is a great way to increase sales. But anyway, we're hoping that if the restrictions are lifted, that the industry is going to ramp up as quickly as possible.
Yes, and I hope so too. And I think there will be a bounce back for sure, because there probably are a lot of people that want to get it going as well. You know what? One of the other things that I want you, Francine, and everybody else to keep in mind too is that just because these are zeros doesn't mean they have to be and remain zero. You know, Francine, have you thought about yet, and I know we will strategize this a little bit more offline, but any other ideas, out of the box thinking, perhaps on how you can bring some revenue in during these times?
Well, I don't know if you've seen my latest social media, and I sent an email marketing that a lot of our products and our services can be used right now in hospitals.
Mm,
So we've created some marketing material, and I've sent them to some people in various hospitals, and have received some favorable responses.
good for you.
So,
Good for you.
yes, so we for instance, there's some dividers in the room, room dividers. There's also some signage to direct traffic and flow, or to direct people to testing area. Um, we also are working with one of our production facility that has come up with a face mask, a face shield actually.
Mm,
So I've presented that to a couple of hospitals as well. So we're trying to stay on top of things.
wonderful. Yeah, that's great. That's great. I'm glad you're doing that. And I'm
It
also glad that
makes you feel better that you're trying to do something than just sitting here and
yes,
letting it happen. Yes.
yes, excellent, Francine. And I like the way this chart looks now. Uh, Far better. This stretches it out because um, I'm sure by the time we get to the end of the year, we're probably it's probably going to be back. We'll all be working again, and we'll be able to make even more adjustments because we'll know more at that point to help bring this line from still trending downward to flat or up.
Right. And
Very
that's assuming I don't pay rent between now and then. I don't know. We'll see. We'll see what happens.
well. The rent we took out for just those 3 months, but
Yeah.
it's still in for the remainder of the
Oh,
months.
it is. Oh, okay.
Yeah,
I didn't realize that.
yeah. So it's there. It's
Okay.
there. Very good. Well, Francine, thank you very much for
Thank
that.
you, Tony. I really appreciate this. It was extremely helpful, and I think everybody should do this because it also eases your mind. Or I know you have to face reality, and it helps you if you're in a good enough position. At least you say you can last a month or two and not worry too much about it.
Yes. And one of the other things, thank you, Francine. I appreciate that, first of all. The other thing, too, is that even when we get out of this, and we all will get out of this, and we all will survive, trust me, after that, I want you to keep using this. You know, that this
Yes,
is
right.
actually more valuable. This is the type of stuff, this is the habit that needs to be created by every business owner when the times are great, because then you have the tool ready when it's not.
That's right.
All
Thank
right, Francine,
you so much. I really appreciate it, Tony.
my pleasure. And as part of you volunteering, uh, I'm going to continue to help you out.
Thank you.
You're
That's
welcome.
great. Thank you.
You're welcome. And Heather, you get the same. You get the same offer. Heather, thank you very much for volunteering. Can you give everybody an idea of the business you're in, please?
I am in the technology sector. We actually sell, design, and install technology systems. So we're in a unique position. We're not as clear cut as, say, IT when it went to services that were that you could stay open. But we did submit. Our industry did say that we could stay open, that we were essential,
Hmm.
but it changes from state to state. So we applied via the state, and we have been deemed essential, but only for people who are our technicians who are installing. So the rest of our workforce is currently working remotely.
Okay, very good. So you are considered essential, and that means then maybe it's not business as usual, but there is a a stream of revenue.
That is correct, because some of our companies have said no contractors on premises. Some other companies have postponed work for the time being. However, there are others that have said, like, for example, a healthcare agency who said, we're essential as well. We'd like you to continue if you're willing to continue. So that does provide some revenue stream.
Okay, fantastic. Now, on average, again, I asked Heather ahead of time to give me her financial or cash information from the beginning of the year for all of her accounts, and we have all of that information in there. And on average, for the year at least, you've been bringing in about 19,000 per week. 19.6. How much? What should we conservatively consider now as the number?
So it's really tough to tell for us, but I would say if we're going to be conservative, I would say somewhere between $3,500 and $5,000.
Between 35 and 5. Do you want to go somewhere in the middle, maybe 40?
Sure.
We'll say 42.50, something like that. And then the expense side, what would you think that would be?
With rent and expenses, so this is not payroll, correct?
No, that's not payroll. Just operating expenses.
I would say about 7,000 a month. So that would be like 1,750 a week.
Okay, 1,750, and then what we'll do is and you feel that that's going to happen throughout this whole time frame, yes?
And there are some things I can play with. We own the property that we function in, so we could defer rent. I don't have to write a letter like Francine does. Well, I could write a letter, but it would be a little bit creepy. So I can defer rent. But I do also know that later this year, our building, we have to reapply for our commercial mortgage. So it's kind of this double-edged sword that sure I could do it in a necessity, but I might need those closing costs or to try to pay off the building later. So
Yeah.
It's something we're considering.
So are you going to pay your rent during these 3 months or not?
I don't know yet, and I'm hoping that this will help me decide.
Okay, so then we'll leave it in there. What I would suggest that everybody is probably going to do, and Heather will do this offline when we meet up. But I'm thinking that because rent is one of those things that everybody knows can be forgiven for at least 3 months, not forgiven, but deferred. We should probably separate that from our other operating expenses. So why don't we do that, Heather? And just without the rent, on average, what would be the cash out payments?
Let's see. So I can tell you, I'll just say the rent that we pay is $3,300 a month.
Yeah. Okay. So then what were we saying before? The 1,750, that was how much a month was it? Did you say?
I said about $7,000 a month.
7,000 a month. Okay. And you said that it was, how much was the rent again? 33?
Correct.
So we're talking $3,700 per month. So equal minus 3,700 divided by 4. Let's go with that. So $925 a week on average. We drop it like that. And then the rent, when would you usually pay the rent? About?
I think rent's paid, it's the first day of the month.
So minus 3,300, we'll add it right now. And then let's see if we can take it out. Then it's a lot easier to take out if we just put it there. So we're going to do that, and we're going to do that. And so now our rent is in there again. And then, so if we do that and we just leave payroll as it is, let's take a look at the chart. So now we're seeing that the chart, you're going negative at right at the end of September. So we want to flatten that. And now we have to talk about payroll. Once again, we're not going to share the payroll worksheet, but Heather, what did you do there, if anything?
So similar to Francine, when we spoke last week, it's a really big eye-opening, difficult to swallow, heart-gripping scenario when you start to put this through. Although some things have happened in the last week. I have one technician, even though we've been deemed essential, has decided that he's not willing to take that chance. So he's chosen to stay home. At this time, I have offered him some home training, but that's going to bring his payroll certainly down to just a few hours a week. So that is I guess, the first step. And I think, so I'm looking more towards furloughing before we have to lay one specific person off, so that everybody's still getting something, but they're getting less hours.
Got it.
So at this point, I would say, if it remained exactly as it is before I furloughed any further, we'd bring it down to about $4,500 a week.
So you're going from 5844 to about 4,500.
Correct.
All right. So then we're going to pull that and bring that all the way over. And then finally, we have your quarterly taxes that you're paying for this period of time. So you had just paid $16,135, and your next one would be due 3 months from now. With the drop off, what do you think that might be about?
Let's say $8,000, because a lot of the work we have done already has been state, so it's not taxable.
Okay. So now we look at the chart, and this is looking even better. You're still positive, and you fortunately have not tapped into the line of credit either, right?
Correct.
Yeah. So this is a great position, and credit to you and Francine for being in a stronger position, because a lot of businesses are already deep into their line of credit. So this is going to make it easier for you to extend through. Even if you are deep in your line of credit, that doesn't mean that it's over for you, though. Many of the businesses that I work with have that issue, and they're working through it. Now, the other thing that I wanted to mention that both Francine and Heather and I will be doing is now we have a like a decent average of what reality is going to be in the coming weeks. Typically, when we do this, obviously, because this is like a new normal, there are things that we probably didn't think about that we will be entering. So part of the process here is that once it's set up, once you've done this, and once you feel at least a little more comfortable with that, the chart, then it's about plugging in reality as much as you know it. So Heather, this week we're almost done. Give me an idea, if you already know, what were your deposits this week?
Not a lot. Oh no, actually, 2, 3, 4, probably about 4,500.
Okay, so you were pretty close. And then, as far as what payments did you make this week, and possibly any tomorrow that you can add to it?
I think that our payments might be about $8,000 this week.
Oof. Okay. So then, so there you go. So that's
right. That changes it. Well, and for us, we've just done a few larger jobs. So those pieces are coming up before we're getting payments from those jobs.
Okay.
So we actually have currently, within the next 30 days, over $200,000 to be paid. And a lot of that, 118 of that, is from the state. So I believe that although it may be late, that I think that's a good position.
Yeah.
I'm pretty confident on that.
Okay. So then what I want to do then, Heather, is that then the next 2 weeks, I want this like to be a rolling 3 where you're trying to plug in as much reality, because it's close enough that hopefully you can get even better at determining what these next 3 weeks are going to be. So if I had to ask you on the deposit side, do you have any idea what next week might look like at this point? And if not, we'll just keep the average.
Yeah, I don't, because we have a bookkeeper. We've hired out a bookkeeper, a firm, and she would know that probably off the top of her head, but I do not.
Okay, and that's fine. In future meetings, what you now know is that's one of the calls to action there. You want to have that information. I will be teaching you how to keep this up to date so you can just manually plug it in, so that when we have our meetings, we're not even asking for that information. It's already in.
Got
Okay.
it.
Because
Yes.
we want the next three, we want to always have our finger on the pulse of those next three. And just make sure that any of the surprises, if we're paying out more, that's okay, as long as we feel like perhaps 2 weeks from now or something, we're going to get paid back for it. We're going to have that business, and they're going to pay us. Or at least you feel confident that it's a month from now, and it's not going to be them stringing you along while you're burning your cash.
Right.
Right. So that's what we'll do from week to week. Once it's set up, like what you're seeing here, again, it's a 5 to 10 minute operation, because ultimately then what I'm going to be teaching Heather to do is to just pull the detail, the cash in and cash out for 7 days. And each week, all she is doing is plugging in the sum of all the deposits, the sum of all of the payouts, the cash out, and then if there's a separate payment for rent or taxes or anything like that, that's a separate item that she pulls out of there. And she's going to learn to check the beginning balance from that cash detail, and making sure that this ending balance is in fact the ending balance that she just pulled out of her cash transaction detail from QuickBooks. And that's ultimately all you got to do. And just by that, you could sleep a little bit better, because you have an idea of what your cash situation looks like. And then now it's more about strategy. How do I improve this? How do I make this better? How can I maybe think outside the box? We're all entrepreneurs, find ways to improve that number, and that chart even looks better. Heather, thank you. I appreciate your help as well. And again, you'll get continued help from me for volunteering. Thank you very much.
Thanks, Tony.
My pleasure. Finally, before I get to Q&A, so if you, first of all, to remind everybody, if you have questions, please, I'm going to stop the share here. Please just send in Q&A the question, and I'll be more than happy to answer it. Also, I'm going to share this spreadsheet with everybody that signed up. So you'll get a copy of the spreadsheet. If you're not, it's going to be a copy of, it's going to be the Excel version. As you can see, though, we are on Google Sheets, if you knew the difference. But if you're not familiar with spreadsheets, or you're not all that good with it, I will be more than happy to help you with an offer, 2 options, and both of them are deferred. I am not looking to get paid anytime soon. I want to help you survive through this. And after we get through this, and after you feel comfortable and you paid off other people, then you can consider paying me for this. But there will be 2 options. One where it's a one-time setup, where I give you 2 one-hour training sessions and get you going, or one where it's a monthly program where I'm setting it up, and then I'm meeting with you on a weekly we're not meeting, we're chatting over video on a weekly basis, and I'm helping you strategize through it all. Those will be the 2 options that you'll see in the email as well. I do have some questions here. Tim said, it seemed like both examples just continue to drop in cash forever. Did the assumptions account for improving environment after July? Yes. Yeah. So the way the spreadsheet worked is that it made the assumption that that there was going to be a slow ramp up afterwards. So in the future, at July, it's not the same. The revenue coming in and the expenses going out were not the same numbers as they were in the first 3 months but they were a slow ramp up for the rest of the year. That was the assumption with that. And of course, on an individual basis, depending on the company, that could be adjusted on the spreadsheet. Kathleen says, does the employee payroll tab calculate for overtime? If not, how would you suggest we calculate that into the spreadsheet? The tab does, and there's another column that does that. And basically it's just a plug-in. The standard that I have is just time and a half, but you could adjust it for whatever it is. And then it just sums up with everything else. So if you put 0 in the overtime, then they don't get any overtime. If you put an X next to their name, then obviously the whole thing's off the spreadsheet. Rosanna, does your advice remain the same in spite of the pending stimulus package? Yes, it does. However, things are changing all the time. And it may change if I learn something that makes me believe that it's to your advantage to keep people on. Usually, though, if you're non-exempt or if you're a business that isn't essential, non-essential, then it still doesn't seem to make sense to me for you to keep employees that you don't have work for. However, with the stimulus package and with kind of the uncertainty of what is in there, it may change. So there is a possibility that it will change, but I have a hard time believing that it would make more sense to keep the employees, but you never know. So we do want to make sure that we're taking a look at that and seeing what's to your greatest advantage. And if passed, there will be financial support for businesses with under 500 employees. Yes, that was the second half of Rosanna's comment. There will be financial support for businesses under 500 employees. We need to fully understand what that is. And then you just need to weigh whether or not it's better for you. Those were the questions that I had. And once again, Heather, Francine, thank you so much for your help. I truly do appreciate it. I will be sending out the spreadsheets to everybody that was here. And again, thank you all for coming. I appreciate your time.
Thank you. And thank you, Tony. And thank you, everyone, for being there, and stay strong and healthy.
Stronger together. Reach out to people, especially with CEO and with Tony. I think that we have this great opportunity to help each other out. So whatever we can do for each other.
For sure.
All right, everybody. Thank you very much for coming to the webinar. We will have more, and I'll give you updates when we do. Thanks again. Have a great day. Take care. Bye-bye.